So when we think about an investment portfolio, um, I like to think about having a bucket that has your fixed income opportunities. So where you're just getting a payment, a straight payment. Okay. And then you've got your kind of like growth opportunities where you're looking at, that might be like a real estate syndication, common equity position, or even like a stock investment. You're looking for growth opportunities, and having some kind of balance within that bucket is important.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome back to the Real Estate Pros Podcast. I'm Cody Crabb with Investor Fuel. Today we've got Suja Shyam with Lux Capital. Now, she started underwriting multifamily deals for institutional buyers, built her own real estate portfolio, and now she's helping investors diversify beyond real estate into cash flow and to private equity opportunities. So we're going to break down kind of where real estate investors should be putting money right now, why real estate alone might not be enough, and maybe some of the reverse as well. Like what should you be doing within the real estate world? So Suja, thanks so much for joining us today.
Thank you, Cody. It's really great to be here.
So how did you go from underwriting institutional stuff to building your own portfolio? I'd be interested to know.
Yeah, great question. So out of business school, I knew I wanted to do some kind of real estate, and I ended up working as an underwriter for institutional buyers or banks, essentially syndicators who were purchasing apartment buildings. And I was their underwriter. And so I was, one of their underwriters. And so it would, we'd write these large packages, 80-page packages. And it was really good training, but it also was not an entrepreneurial environment. And I knew that I wanted to be an entrepreneur, handcuffs with underwriting. And so I eventually had just a major life reset, which is a story for another time probably, but it allowed me to kind of unlock those golden handcuffs and just take some reflective time for myself and decide, well, where is it that I really want to take my life, And what I realized, I didn't want to go back to a desk job. And it took kind of a separation from my work to be able to realize that I actually don't want the golden handcuffs. I want to build my own business. And I had learned to live kind of frugally during that time off. I went and I traveled, and I was able to, that gave me a much longer runway. So I still had savings, and I had already house hacked and done some of those foundational things. I had flipped a house. And then I started uncovering limiting beliefs and realizing that oh, okay, I just want to focus on building my own real estate portfolio. I became what I call an accidental Airbnb host. So I got back from my travels and I started putting my basement onto Airbnb. And it was a good time to do that. It was 2013 at the time, 2014, 2015. And, it was like instant money. So an instant success. And I just had to keep iterating. So I bootstrapped that business, my Airbnb business, and I grew it from 1 to 7 units. During that process, I decided I needed to go back to work because I wanted to be able to buy more real estate. I was listening to Bigger Pockets and looking at my financial position and realizing that if I wanted to get a home equity line of credit, if I wanted to buy another piece of real estate, that it would be helpful to have a W-2. So I went back to underwriting for a very short and sweet period of time, purchased my next building. And at that point, I was ready to replace my income from underwriting.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
One of my one of the biggest things I needed to overcome was kind of the barriers I had in my mind about what was possible, right? And so doing kind of the mindset work, surrounding myself with entrepreneurs, and really just deciding, if not now, when was I going to make this happen? And then just keep putting one foot in front of another, solving problems, building on past success, solving, bouncing back from mistakes, and just continuing the journey of learning. So essentially, I was able to go from zero income to income replacement within 3-year period. And it came from simply building this Airbnb portfolio. And at that point, I was very strategic. I decided this is working. I want to double down here. And so when I looked for a building to buy, I looked for a building that had this proper zoning so that I would be able to convert it to an Airbnb, built, a cottage in the back of one of my properties. So that was able to be an Airbnb. And I was doing it all with all the regulations in mind. So this could be a long-term success, not just a short-term cash solution. So I would say that this was one of the biggest steps because it allowed me to replace my income, and then I could decide, well, where do I want to go from here?
Yeah. So, what did working on the institutional side first, like what insights did that give you that you maybe wouldn't have had once you got into real estate?
Yeah. So working for the institutional side, underwriting for banks, is a very, very tedious process. It takes us it would take us months to underwrite a deal. Depending on the type, if it was an equity, either between 2 and 10 months, depending on the type of loan. And it was painstaking. And so what it taught me was how to be really conservative, which is a good thing. It's good to know how to look at how to uncover every single stone, and how to be really thorough, and how to look at things with a super critical eye rather than rose-colored glasses. So I think that was really good training, but banks are very risk averse, right? And so actually doing deals and making things happen is a totally different skill set that I did not learn in the banks.
Yeah, I think getting into it, getting into things, I feel like you learn so much more just being in it for a few seconds, and having that background knowledge too of how the process works, I'm sure is super valuable as well. So, okay, about just kind of, because we're talking to real estate investors specifically, what sort of what are people taking? Where are people taking on risk without even knowing it? Like they're starting to do their deals. They find something, they maybe find on paper what to them what looks like a perfect deal, and what might they not spot that is risky?
For sure, I think it depends on where we are in the market cycle, right? And so I think at one point people were not accurately assessing market risk. And that's hard because no one knows when things are going to shift in a really dramatic way. Like, for example, when interest rates went up in 2022, a lot of people didn't see that coming. A lot of deals suffered as a result. And so now we're in a place where it's actually, we're kind of at a place where things are actually looking up in a lot of ways. And so that's a good place to be. But I think that in general with underwriting, there's this idea, DK. You don't know what you don't know. And so really always trying to look at a deal without the rose-colored glasses on is a skill that I think I learned in the banks. And I think a lot of investors, because they're trying to just make something happen, it's easy to kind of overlook things that you might not be considering, whether it's related to, anything from expenses to looking at the rent roll properly, to actually doing your environmental due diligence properly, to, what the actual building looks like and what your costs are going to be associated with that. There's just a lot to actually look at, and I would say it is a challenge to strike that balance between optimism and realism.
Yeah, totally. I mean, even just in life, sometimes kind of tricky. Uh, so, all right, we've got some background on your insights on real estate investing and kind of what you do. Now, tell us a little bit about, you mentioned before we were on the podcast, you mentioned one of the things you do is you help people who are investing in real estate kind of diversify and move into other realms. Can you give us a little more information on that?
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yeah, absolutely. So I started investing in real estate syndications in the late teens. That was a time when things were going really, really, really well in real estate, and we were all kind of waiting for something big to happen. Well, something big did finally happen in 2022, but not before interest rates went to zero and commercial real estate went kind of crazy. Pricing was really high. Things were selling for a very high price, of course, and then we hit the brakes in a major way. And after going through that process, um, you know, we learned a lot in our portfolio, and we learned a lot about how to make a resilient portfolio, because what's working today isn't necessarily what's going to be working tomorrow. And
Yeah.
one thing I would say is that debt investors tend to do well throughout the cycles as long as they're protecting their downside well. And so we started adding more debt-like positions into our investment. So for example, when a lot of people start investing passively into real estate, they're usually investing into the common equity position. The common equity has the most to gain, but it also has the most to lose. So when things are going well, it's obviously it's a great place to be. But if there's ever any bumps in the road, then that's where you stand to have the most issues as well. So we started adding positions like first position loans and second position loans into our capital stack, or into our investment offerings, so that people could have maybe lower possible returns, but also much more certainty in terms of distributions, right? So if you're in a first position, as long as the wheels are still on the bus, you're going to get paid. And so that's one thing that we learned. Another thing that we learned is that real estate generally, there's periods of time when it's doing very well, and there's ways to kind of protect against that by, for example, being in different types of deals. So we also have not just multifamily, but we've got different industrial, we've got self-storage, we've got short-term rentals, we've got land investing, and just a robust commercial real estate investment portfolio, not just focused all on real estate or all on one market. So there's lots of ways to diversify within your real estate portfolio. And then on top of that, it's also important to have a resilient portfolio to diversify outside of real estate, because there's certain headwinds and tailwinds that do just generally trend with real estate. And so we started looking at different types of business investing opportunities that have either steady cash flow or high growth, right? So when we think about an investment portfolio, I like to think about having a bucket that has your fixed income opportunities. So where you're just getting a straight payment, okay? And then you've got your kind of like growth opportunities where you're looking at, that might be like a real estate syndication, common equity position, or even like a stock investment. You're looking for growth opportunities, and having some kind of balance within that bucket is important. And obviously, some of those investments are going to give you tax benefits, some are not. Some are going to give you more downside protection than others. And then at some point in every investor's career, it's important to add in high growth opportunities, because those high growth opportunities can really move the needle as well. But it has to be the right position size. So that's another concept that we look at whenever we're looking at someone's overall investments. An investor should look at, well, if they're looking at an investment, what's the appropriate position size for this investment, given my overall portfolio currently and what my overall goals are.
Yeah, I think that's super important to think about for sure. I mean, we talk about real estate investing, but I mean, if you're all in in one specific area, that can be kind of risky. I mean, that's the first thing they teach you when you start investing. So I'd be curious, like, who is the ideal person that should start looking at stuff like this? Like, what situation would someone find themselves in, and then you'd go, yeah, we need to talk. I need to help you out here.
Yeah. You mean in terms of investing outside of real estate?
Yeah.
Yeah, for sure. So, well, let me just back up 1 second. So whenever I meet someone for the first time, and depending on where they are in their career, if they're kind of new to the private investment space, the first thing I would direct them to is something like our income fund, which just delivers a straight 10% return. It can deliver 11 or 12 if you invest a larger amount, but it's just a straight 10% return. And um, it's important to have something like this as your first investment, I believe, because it's nice to have that consistency. You're just every quarter you're getting, 2.5%. That's 10 divided by 4. And we're in first position in that deal. So that means that it's very well protected. It also has liquidity after a year. And so that means that if you need the liquidity after 1 year, you can take that money out. And so that's usually what I ask people to invest in, something like that. It doesn't have to necessarily be with me, but have some type of investment like that before you start getting into some of the more, maybe more exciting investments, so to speak. But I would say, again, it's going to be different for every investor because it's going to depend on your portfolio, what your current income looks like, how stable that is, and what your current portfolio design is. But I think once you have like a handful of real estate investments, it is probably time to start looking and saying like, well, how else do I want my private investment portfolio to look? How can I gain some knowledge and feel comfortable, invest with people that we trust, in order to start just building a more resilient portfolio overall. Because again, with real estate, when things are going great, everybody's really happy, but you just never know when things are going to shift. And usually it's good to try to shift before things go, take a turn for the worse.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah, maybe don't. Yeah, you don't have to ride the wave downward if you can help it. If that'd be good. Yeah. So kind of being able to forecast things a little bit, and that seems super important. But a lot of people get kind of overwhelmed, and they're like, "How do I even interpret all this information I'm getting?" So, like, given where we're at right now, like if we took a snapshot of where things are at right now, interest rates and uncertainty things, how are you thinking about this? Based on like where we're at right now, like what should people think of when they're thinking of the future?
Sure. So I think that we are in an optimistic position when it comes to real estate in general, meaning that it seems like housing supply is getting absorbed. So there's going to be some upward pressure on rents increasingly. We're already starting to see some of that. So that's positive news, at least in the multifamily space. And oftentimes some of these asset classes can track together. So what I would say though is that like we're still primarily focused on adding some of those first and second position opportunities in to our real estate portfolio, because I think that it's just we're more focused on first and second position real estate deals, and then higher growth opportunities outside of real estate investing. We will still possibly do some land investing when it comes to real estate, but it's just we're very, very targeted when it comes to those common equity positions.
Yeah, I think I really like the idea of the buckets. Like that's, being intentional about where you're positioning yourself. I think that's something that a lot of investors overlook, like diversifying, but like how are you diversifying? And I think that's really important. So all right. let's say someone is listening to this and they're realizing like, I probably need some help with this. They're all kind of all in on one lane. What's the first move that they should make?
Yeah. I mean, I think trying to learn about adjacent opportunities that are sort of adjacent to what you're currently doing, but maybe a little bit different, right? Because just diving into something totally new can be intimidating and you might feel like you don't know enough in order to invest. But if you're investing in something like slightly adjacent, for example, like our land investing deal, that's still real estate adjacent. We're still working towards eventually building multifamily. So you can, most people who are investing in real estate can probably understand the general thesis behind that. Um, but it is different and it has a different risk profile than, say, just investing into a regular multifamily deal and a common equity position. So I think that's how I've kind of approached it as like, I've built out my network and I've started looking at adjacent opportunities. And then over time, you start to work with people. There's always going to be risk when you're working with different types of investors. But, we've got to look at investing in terms of the long term. This is a marathon, not a sprint. And so looking to build those long-term partnerships over the last, decade that I've been doing this, I've sort of worked with a lot of different people and decided who it is that I want to keep doing deals with based on how business has gone. Who do I have a good relationship with on how do they handle problems? How is communication? Are they delivering? And if not, like, what is the reason for that? And is it market-based? Is it sponsor-based? And do I agree with their thesis? Are they reliable? So it takes time to really build up these relationships, in my opinion. I'm very, very careful before investing with others. And I think that there is a need to just get started. But once you get started, it's also important to kind of really try to build up those relationships and just not put all your eggs in, invest slowly over time, right? So I would say that if someone's wanting to diversify, it's still important to try to keep some money in a relatively liquid place, and then just invest it slowly or in smaller amounts because, some of these deals have higher minimums, but it can be good to just keep diversifying. So you got to strike that balance between, is this a deal I really want to invest in? What's the minimum? Is that an appropriate position size for my portfolio? Looking for adjacent opportunities adjacent to what you already understand and have experience in. And then really like trying to build those relationships with people where you can trust, you can work towards building up that trust. It doesn't just happen overnight. One of the things that people come to for me is they feel like I can give them a bit of a cornucopia of offerings. And it's just one person, right? They're just working with me. So they have a certain degree of trust, which we've built up over the years after, um, doing several investments, having them deliver, and they built up a certain trust so they can kind of know that I've started to explore these different, um, I'm exploring these different avenues in a very careful and methodical way. But it's giving them an opportunity to diversify.
Yeah. Well, Suja, this has all been really, really helpful. I love how you break down like risk versus growth and like why this is so important. So if people want to work with you or find out more about you or anything, where can they go online to learn about you?
Yeah, the best way to learn about me is to sign up for our investor group on the Lux Capital website, and it'll prompt you to book a call with me. So that's luxe-cap.com. And, I just want to put this out there for anybody who is interested and just wants to give me a call. Feel free to just send me a text message to 650-804-8043. And you can just tell me that, say that you heard me on the Investor Fuel podcast and you want to just book a call and we'll get something going. So we can talk about, what might be a good next step for you.
Yeah, that's awesome. And not too many people will give you their phone number. So that's a good offer. I would take that if I were you. Well, thank you so much for joining us today. I really appreciate your time. And to our listeners, thanks so much for joining us. And if you liked what you heard today, go ahead and hit subscribe, like, comment, all the things so you don't miss a single episode. And Suja, thanks one more time. We really appreciate it. Have a good one. And listeners, we'll see you later.
Thank you, Cody. Thank you, everyone.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.